Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look at the Aussie versus US dollar. Today's date is August 28, 2024. Let's get started. Now, before I talk about the technicals, we do have CPI coming out at the bottom of the hour. The weighted CPI year on year is expected to come in at 3.4%. That is down from 3.8% last month. But of course, what we know is that the CPI is not one of the quarterly numbers today, so it only incorporates a percentage of what will go into the final number. That won't be released until the later in the toward the end of September. So there's a lot of time between now and that level. Nevertheless, the markets are kind of trading as if it wants to make a move after the data release. So we'll see. We'll be paying attention to what that might look like. And from a technical perspective, what we know is that yesterday I talked in the video about how this 0.6760604 level was going to be a key level. Why would it be a key level? If you go back in time, take a look at this high right here. It came right near that level. We traded a little bit above and below it here, but then reestablished support here before trying to move higher. And then we fell back below that level, using that level as resistance to move all the way down to the low price of 0.63487. Since then, we've had this sharp rally, and in last week's trading, at least midweek, we came back up to that level at 0.67604 and found willing sellers against that level. It wasn't until Friday, after the U.S. or the Federal Reserve Chair came out with his dovish comments and that the Fed was going to look to ease rates in September, did we see the break to the upside, breaking above that 60 level. And since that time, we have came down and found support against that level in trading yesterday. So the 0.676 level, 60 level, has done its job of holding support. It would take a move below that level to increase the bearish bias. Now, what's happening on the top side? Well, if you take a look at this high price, which goes back to the month of July, and take a look at the high price that we saw on Friday and going into the early, Monday and trading here today, what do? We found willing sellers against the previous high right here. So there's a ceiling up near the 0.6798 level. Let's call it 0.6800 level. Currently trading at 0.6788. So the market's kind of saying, I'm going to wait till the CPI data comes out and that to make up my mind. And so what we know from these technical levels is we're going to be looking for a break. If the price or momentum would continue, we'd expect and get above the 68 level. We'd look for further momentum to the upside. Conversely, if the price moves below the 0.6760 level on some sort of lower number of the CPI, then we could see further momentum to the downside. I would look toward the swing area down here as the next key target near 0.6708 and 0.6713. On the top side, I'm going to have to take a look at the daily chart. And when we take a look at the daily chart, getting above the 68 level up through here would then target the 61.8% retracement of the move down from this high right here to this low right here. That level comes in at 0.6818. Now, we did move above that level here on its way to a high price of, probably around the 0.686 level. So we need to get above that 61.8% retracement. And if we do, then we'd start to look toward this high price near the 60 level right around here as the next key target on the top side. And we break above that level, we'll look toward the 95 level, toward the 0.69 level on the top side as the next key target. So the market's setting itself up for a move. Which way it goes might depend on the data, but certainly we know that there's support at the 60 level on the downside, resistance at the 0.6800 level on the top side. We'll see which way the market wants to break. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.